2023 has been a year to remember for financial markets. Stock hit all-time highs, gold hit all-time highs, and 10-year Treasury yields climbed to their highest level in 16 years. This comes even though we had started the year with a banking crisis in the U.S., along with the ongoing conflict between Ukraine and Russia, and then the Middle East conflict between Israel and Hamas. All of that happened in 2023, yet stocks and gold still managed to hit an all-time high. So now as we look forward to 2004, what can we expect in the markets? What are some of the main trading themes? Because that's really what all of us are focused on. And I think there will be three primary themes in the markets for everyone to watch. Number one, we're going to see slower global growth in 2024. US is expected to grow faster than the UK and Canada, but growth across the globe is expected to slow. And 2024 will be a period where you start to see economic data show weakness in the labor market and inflation in many corners of the economy. In the US in particular, we think that the US growth was slow, but it will still outperform its peers like Germany, France, UK, Canada. And that outperformance could still sustain demand for the US dollar. China is also expected to slow, and that slowdown could lead to dramatic consequences for its trading partners. In terms of China, it will be a stretch for them to reach and to achieve their 5% growth target because they can no longer count on the post-COVID rebound. And, the government stimulus that the country's been waiting for has been very lackluster. They've been really under par in terms of what they're providing to support growth. Also, the problem in China is that the youth unemployment rate is at a record high of 21%. It's become so bad that, a lot of the youth are returning to their, to the roles of full-time children or going back to get their masters. So all of that is really going to hamper growth in China in the coming year and could provide a serious problem for growth in the world's two largest economies. So that, of course, will filter into slower growth for different parts of the Asia-Pacific region, as well as North America and a lot of the U.S. trading partners. Now, as a result of slower global growth in 2024, the second major theme this year is there will be no more interest rate hikes. We are going to see the beginning of interest rate cuts. And the question will be, who will lower interest rates first? 2023 was actually a golden year for carry trades. It was a very, very strong year. Carry trades performed very well. They basically, saw significant yield appreciation along with capital appreciation. And a lot of people got into those trades. But, as central banks completely end their tightening cycles and finally admit to it and actually start cutting interest rates, those carry trades are going to start to be unwound, especially if Japan comes in and they start to talk about ending their zero interest rate policy and start raising interest rates. So this year is going to be a year where there'll be no more rate hikes and the beginning of rate cuts. The first central banks to lower interest rates are going to see their currencies weaken the fastest. The market is currently pricing in, and always changes, a 70% chance of an interest rate cut by the Federal Reserve in March. But the Bank of Canada is actually expected to potentially be one of the first central banks to lower interest rates, or maybe even the European Central Bank before the Federal Reserve. So we'll have to see, because if they do come in and start to signal to the market they're lowering interest rates before the Fed, then you're going to see the euro and the Canadian dollar start to fall more aggressively. But it will be a period where we start to see an unwind of carry trades, and this kind of presents itself as the opportunities that we have in the coming year. So first off, typically Fed interest rate cuts coincide with big rallies in gold, which shouldn't be a surprise because, first of all, the yield in the dollar is starting to decline, so that could lead to sell-off in the dollar, and gold is priced in dollars, so that could lift gold prices. And then secondly, sometimes the interest rate cuts are coinciding with a slowdown in growth, which could lead investors to seek safety in gold. So for those two reasons, we could see gold rally further in 2024 as Federal Reserve interest rate cuts tend to coincide with strong rallies in gold prices. Number two, the unwind of the golden carry trade could make the Japanese yen a very attractive currency to buy. In fact, Japan is a huge buy for legendary investor Warren Buffett. There's a lot going on in Japan that could lift the Japanese yen. First off, they're experiencing the fastest pace of growth in 30 years. They finally see inflation rise, and inflation is rising even as inflation is falling in other parts of the world. world. They are also seeing a demographic shift where the older population is starting to leave the workforce and the younger population is starting to come into the workforce, which could lead to kind of new energy and new growth. And the wars that we're having in the different corners of the world is sparking new investment into supply chain and manufacturing. And that could not only benefit the Japanese yen, but it could also benefit the commodity sectors as well. In fact, the third opportunity in 2024 that I like is the natural resource trade. Because a lot of the reason why Warren Buffett has gone long the trading firms in Japan is because a lot of them are active in the natural resource and commodities market. So the three big opportunities in 2024, should be number one, gold, number two, the Japanese yen, and number three, natural resources. Now, the third major theme this year is going to be election madness. For the first time ever, we have over half of the world's population, facing elections or have elections in their country. There's 70 countries, including the US. There's going to be a lot of political focus. Now, of course, a lot of people will be talking about the US election in 2024. And, it's important, but at the end of the day, the election is not until November. So while we could get some insight as the year progresses, the real impact won't be until we see who wins, right? So the front of the year, I think, should be very much more focused on slowing global growth as well as the interest rate cuts from these various central banks. But with that said, the S&P 500 has never declined in a presidential re-election year, believe it or not. So that means that even though stocks had hit record highs in 2023, they could continue to rally in 2024, even with slower global growth, as well as the ongoing geopolitical uncertainties. And then also, the US dollar tends to perform well in an election year. I think in the past 10 election years, the dollar has only depreciated in one of those election years. So this 2024 could be a good year for stocks as well as a good year for the US dollar. And of course, we're always watching geopolitical uncertainty because it could continue to affect the global markets. So these are the main themes that I think everyone should be focusing on as the year progresses. Of course, things could change, and some of the biggest events, in the past few years have been completely unpredicted, like COVID and the attack on Israel. So keeping on top of fundamentals will be important, and I encourage you to subscribe to this channel, hit for notifications, and I'll update you whenever there are any big stories. And also, you're watching this because you realize that fundamentals matter. And if you want to learn more about how to trade with fundamentals, check out the description below for a special discount link, my brand new fundamentals trading course for 2024.